Yo, what is going on, guys? Welcome to another video, and in today's video I am giving you guys a little bit of a throwback here. I haven't made a video in this kind of format in a long time. Those of you guys who have been following me back when I had 100 200 subscribers, remember I used to make videos like this and I would go over earnings reports, but I am bringing it back because I wanted to go over Apple, which you all know is one of my favorite companies, and in terms of stocks, it is my #1 largest individual stock holding. Obviously, you guys know my actual #1 holding is index funds. Mostly make up anywhere between 60 to 80, sometimes even 100% of my portfolio, depending on which portfolio we're talking about. But right behind that is actually Apple stock, which by market cap is the largest company in the world, right? And so let's go ahead and get right into these earnings. We actually have a lot to talk about, and we've got a lot of headwinds coming up with this stock too. So I'm going to talk to you guys about that as well. And so there you have it. Let's go ahead and get right into it. And so EPS right here. EPS came in at $1.52 versus $1.43 estimated. Now, if we scroll over to total net sales, which actually represents the revenue, if this thing will let me highlight it, there we go. That represents the revenue. Revenue came in at $97.28 billion versus $93.89 billion. That is up 8.59% year over year. In terms of services, right here it is. In terms of services, services revenue came in at $19 billion versus $19.72 billion. That is up 17% year over year. In terms of other products that they sell and do, that came in at $8 billion versus $9 billion. I feel like I'm saying this wrong, because it says it's up 12.37 year over year. I got to find that on a sheet. We're just going to keep going. Sorry. We're going to move on to iPhone revenue. So you can see that right here. iPhone revenue. Nope, I'm sorry. That's Mac. That's iPhone. iPhones don't sell no 10 billion, they do 50 billion. So iPhone revenue came in at $50 billion versus $47 billion estimate. That is up 5.5% year over year. I know the growth is really slow, but you guys got to remember Apple is making so much money. They're bringing in such a killing. It's really hard to grow, 80%, when you're bringing in this kind of money, unless you're like a Tesla, but Tesla is Tesla. But anyway, Apple's incredible. So there's that. Now we get to move over to the Mac revenue. The Macs are the ones that are selling at that $10 billion, and that's versus the $9.25 billion estimate. That's up 14% year over year. iPad revenue right below it. iPad came in at $7 billion year over year. And then after that, you've got gross margin, which I don't see on here, but I have the notes from CNBC. Gross margin came in at 47% versus 43% estimate. So those are the results for that. And this is what I mean, guys, when I say great fundamentals. When I say great fundamentals, I'm talking about companies that are doing numbers like this. I mean, companies that are bringing in freaking $97 billion in revenue. That's what I mean when I say great fundamentals. It's not really about safety per se. It's really about companies that are going to continue to bring in cash flow and continue to do better and grow and help shareholders. Because like I said, the stock market is a risky place. It's not easy. And I always say this, I don't have an issue with having risk in your portfolio. The issue is when you put 100% of all your investing money into risk and speculation. That's something that you don't want to do. I support risk all day long. As a matter of fact, I took a risky investment when I bought Tesla in 2017 and it paid off. I get it. I understand. But I just don't want to see you guys get absolutely demolished and creamed. So like I said, just allocate a small amount of your portfolio to risk, and the bulk of your portfolio, put it in something good like index fund, Microsoft, or Apple. That's just my philosophy. So moving on, I wanted to go ahead and move on to some other cool things that Apple is doing. I don't see it in here, at least not directly glancing. But anyway, I have it in my notes, so it's okay. So in addition to everything you guys just saw, Apple said that its board of directors authorized a $90 billion share buyback. Let me say that again, guys. This is what I mean by great companies. We're not even talking about the dividend yet. We're just talking about the company buying its own shares. Apple is going to allocate $90 billion to buy back shares And keep in mind, Apple did something very similar in 2021 when they spent about $88 billion on share buybacks in 2021 alone. So if you're wondering why Apple performed so well, keep in mind, Apple is up 21% since last year. I'm sure a big part of that reason is because the company bought its own gosh dang shares, and these are the type of companies that you are definitely going to want to have some of your money invested in because they're just that great, right? So now Apple also increased its dividend by 5% to 23 cents per share. I actually think that's on the low side considering how much money this freaking company has. And to be honest with you guys, I really could care less about the dividend. I mean, obviously, I'm in a few companies that pay a dividend, but I just don't care. Whenever I get dividends, I just reinvest it. But I don't care because honestly, dividends will be so much better if you didn't get taxed on it, or at least if the tax rate was maybe very low or something. I don't know. But unfortunately, you get taxed on it. So it's just kind of stupid. So who cares about dividends? Now, here's what I wanted to move on to, guys. Here's where it starts to get a little serious, right? So we've got some serious headwinds with this company. So Apple CFO warned of several challenges in the current quarter, including supply constraints related to COVID-19 that could hurt sales by between $4 to $8 billion. That's a lot when you're thinking about a company like this. That's actually pretty significant. Apple also warned that demand in China was being hurt by COVID-related lockdowns. Obviously, we all hate COVID-related lockdowns. We all can't stand that China policy because honestly, it's really hurting a lot of our companies. It didn't have a direct effect on Tesla yet. I mean, it did, but it didn't. Tesla was able to get through it, but there's no guarantee that Tesla is going to be able to survive if they ramp that up and continue with these COVID lockdowns and start shutting down factories. So whenever I see Apple saying things like this, it makes me think of some of the other companies that are heavily involved with China, and Tesla is one of them. Moving on, Tim Cook said China supply chain problems will affect all product lines, so that's something to keep in mind as well. And the company's decision to suspend sales in Russia due to the war in Ukraine is also expected to hinder year-over-year growth in Q3 of the fiscal year. That is very important to keep in mind. And the reason why that's important to keep in mind is because although Apple posted a really great quarter, I think it's important to understand that the next quarter earnings might not be so good. And that's something that you have to keep in mind. So I'm saying this right now. Do not be surprised if Apple has a bad quarter the next time they report, which I believe is in June. And don't be surprised if the stock tanks because of that. So like I said, that's just something to keep in the back of your head. So if you're thinking about buying Apple, there's nothing wrong with buying Apple in the 150s. As a matter of fact, you guys know that I absolutely love this company for the long term, but just keep in the back of your head, a quarter from now, this stock could very well tank below it. Obviously, you can never predict. You don't know for sure. But basically what I'm trying to say is do not load the boat on this company. And if you really want to consider really going heavy in this company, then I would say wait a few quarters, as the company is already telling you we're going to have some headwinds coming up. So it's definitely something that you can't ignore. CFO also said that the suspension of sales in Russia will reduce sales by about 1.5 percentage points. The CFO added that, here's the important part. Here's the most important part, guys. The CFO also added that the company sees double-digit growth in services in the quarter, but with deceleration from the March quarter. Ooh, that's what you need to be mindful of. So that tells me right there that going forward, we're definitely going to have some serious headwinds with this company. And we could have a bad quarter, which actually could cause Apple to tank. Now, let me be very clear. Do I think Apple is ever going to tank like a Netflix? No, I do not. So when I say tank, I mean, could Apple possibly go to the 140s, maybe tank another 5 to 6 to 7, maybe even 10%? Yes, it could very well do that, a company like this, if the headwinds end up really affecting the business, because that's just how the market trades these days, Well, that's how the stock market is, period. So what is my plan going forward? Well, I'll tell you guys right now, I love Apple so much. I think this is going to be a phenomenal company. And I'll even give you guys a price target, which is something that I rarely do. But I'm going to be honest with you guys. I think this company is easily going to go to $200 within the next year or so. That's honestly what I truly believe. In the long term, it could probably even go up to 250 or even higher than that. But if you guys want my honest opinion, I do expect to get a pretty nice, significant return from my Apple stock. And keep in mind, I've already held this company for a while. I've had this company for a few years now, so I already own it at a lower price, and it's already done so well. It has honestly amazed me how well this company has done. I mean, we just go here to to the 6-month chart, you can just kind of see. I mean, it's been very volatile, but if we just type in the 1-year chart, I mean, look where it was back in May of 2021. It was at 125. Even as bad as this market is this year, Apple is still, for the most part, held on to its gains. And I think that's something that just cannot be denied. In a market where just about every stock almost, at least on the growth side, have completely given away all the gains they made in 2021, Apple has not only held on, but honestly, I think Apple can continue to do well and hold on to those gains in the long term. Now, obviously, the headwinds that could affect this company in whatever quarter that it is. I know Apple does weird, but the June quarter, whatever quarter that is that they report, although the headwinds could affect that, I don't see Apple going to the 120s. I really don't. That's just my honest opinion. I think the lowest it could go is probably right here where you're seeing right here on October. I could definitely see it possibly going to the 140s. I'm just giving you guys my honest opinion. Headwinds are no joke. And obviously, Apple is one of those companies. If there's any company that can get across those headwinds and still make it happen, it's definitely Tim Cook and Apple. But just giving you guys a warning. They're telling you right now what the next quarter could hold. So don't be surprised if they miss earnings in the next quarter that they report. So definitely don't load the boat on Apple. But like I said, for me, every time I get paid every 2 weeks, I always dollar cost average. So I'll definitely still be buying Apple whenever it goes to the 150s and the 140s. But I also keep in the back of my head that this thing could very well not have a good earnings when they report the next time in June. So there you guys have it. That'll go ahead and conclude today's video. Obviously, this is one of my favorite stocks. I mean, all I got to say is every single person has some type of Apple device. That should tell you everything you need to know. Everybody's got some type of iPad, iPhone, AirPods, something. And I think that demand for their products is only going to continue. And let me throw one last thing in there. I have no idea how long this video is, but let me throw one last thing in there. They are still supposedly working on the Apple Car, and who knows how revolutionary or disruptive that could be if they actually do it. So that's another reason why I think that Apple is something you're definitely going to want to continue to have in your portfolio, because this company is just so revolutionary. I've said this plenty of times. When the iPhone does get disrupted by whatever ends up happening, freaking computers in your arms or freaking augmented reality or whatever the heck they got going on over there in their secret labs, I think Apple is probably going to end up being the company that disrupts itself. So that's all. Those are my thoughts. And obviously, you guys can tell by the enthusiasm, Apple is one of my favorite companies. I absolutely love them, but also wanted to give that warning as well. So there you guys have it. That will go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you guys in the next one.